Let's talk to Victor Mupunga now. Victor is the head of research at Private Clients by Old Mutual Wealth. The world is very uncertain. Inflation globally is coming down. The signals are all pretty good and solid, but it is unpredictable. So can we go defensive? Perhaps into something like healthcare, because although healthcare is regarded as a bit boring, a little unsexy, it's one of those places where often good investments can be made.
Well, Bruce, I guess if we look back, over the last 6 months, where the market is up almost 20%, it's probably not a bad time to be thinking a little bit defensive. But if I'm to sort of speak on the spectrum in terms of defensive, aggressive, it's probably not all the way out, in terms of defensive. I mean, you mentioned the healthcare as an example. It's interesting that, if one sort of thinks of all of the concerns that are at the top of investors' minds at the moment, in terms of high interest rates that you alluded to, a slowing economy eventually, which will probably eventually lead to a recession, right? You'd expect some of your more defensive sectors in anticipation of that slowing economy to actually hold up relatively well. And yet, if you look at the year-to-date performance, if you look at the performance over the last year globally, it's interesting that some of those defensive companies, defensive sectors in general, have actually lagged the market by quite a bit. I think there's a bit of a disconnect there in terms of what's top of mind from a concern perspective, from an investor perspective, and what's actually happening in terms of the portfolios that investors manage.
Healthcare is a broad church, though, as we learned during the COVID-19 pandemic. Not all healthcare investments perform in the same sort of way. Hospitals really struggle, for example, during a pandemic because beds have to be kept empty in case you get pandemic cases coming in, so you don't get the elective surgeries happening. So hospitals turn out to be quite a lousy investment during a pandemic, even though they're dealing with a huge health crisis. It's counterintuitive on that particular front. So when you're looking for defensive stocks in a defensive sector in an environment which is uncertain, how do you make that value judgment?
Yeah, look, I think from talking to many market participants, market observers, I think many fall into that mistake of grouping healthcare as one sort of monolithic sector. But it's worth pointing out, there are different aspects to healthcare. You obviously have your boring, unsexy, as you refer to it, part of healthcare, and we do have exposure to that, and that tends to be typically your most defensive part of healthcare. And a company like Johnson & Johnson comes to mind. These are companies that tend to be driven by long-term themes, that play out over decades. Think of an aging population as an example. The increased disease burden, is another example of a theme that plays out over decades. So that's your very defensive part of healthcare. And then there's probably another part that doesn't get as much credit as it should. And these are your faster growing healthcare businesses. And in our portfolios, we actually have more of those as opposed to your very predictable defensive companies. And if you look at the overall health sector, look over the last 5 years or any meaningful period for that matter, 10 years, 15, 20 years, healthcare has actually outperformed the broader market. And the reason for that is actually a lot of those faster growing companies that, even as we look 5 years out from where we're sitting today, these are businesses that we think are able to grow earnings by double digits, which is definitely not boring in this environment.
So what sort of companies are we talking about? Are these companies that are household names? Do we see their names on the packet of pills we might be prescribed by a doctor?
Yeah, some of them we probably can, if you kind of scratch at the bottom of the packet. But the two that we are specifically invested in are probably not well known. One of them is called Danaher, and the other one is called Zoetis.
I know neither of those two companies. What do they do?
Yeah, sure. So Danaher, I suppose it's useful to think of it from the perspective of a pharmaceutical company, because that's a business or that's an industry that most people would be aware of. So Danaher, they don't make any of the drugs or the medicines that you would see at the back of a packet. But what they do is they manufacture and sell a lot of the equipment and the consumables that your pharmaceutical businesses actually end up using. So while it's difficult, I would almost say impossible, right, to predict which new blockbuster drug is going to be manufactured by GSK next year. What we know for certain is that a lot of the pharmaceutical companies and the biotechnology companies are investing a significant amount of money to try and figure out, a lot of the medicines for the significant ailments that humans are suffering with at the moment. And that increased investment is a benefit for a business like Danaher.
So In the olden days of investing, was it JP Morgan or one of those old guys who said in a gold rush, you never go and invest in the gold claims, you invest in the companies that make the picks and the shovels because they're always going to be needed. Is that Danaher is the picks and shovels of the 21st century, is it?
That's an absolutely correct analogy. I mean, if you kind of drill down a little bit more into the business, I mean, they generate about 75% of their revenue from consumables. So think of these as things that, or recurring sales that a lot of your pharmaceutical businesses or your biotechnology companies need to come and continuously buy from Danaher. That gives them significant pricing power. It gives them a lot of margin, which means that over a long period of time, this is a business that's able to grow double digits, and we find that attractive. Now, given the concerns around, I guess, or rather the excitement around AI, etc., these businesses have lagged the rest of the market. In fact, I think Danaher is down over the last year, and so that, to us, we see that as an opportunity, and we've taken this opportunity to increase our exposure to that sector and to businesses like Danaher.
It's a sector that loves to do unpronounceable names. The second company was called?
Yes, the second company is Zohutis.
Zohutis.
That's
what does it do?
So Zohutis, I think many more people would be a little bit more familiar with that business. Certainly, if you're into pets. So again, sort of thinking of it from the perspective of a pharmaceutical company that or some pharmaceutical businesses that we're able to identify with. So what they do is they are essentially a pharmaceutical company, but for pets and livestock, and they sell a lot of their products through the vets. And what makes that segment of the healthcare industry a lot more attractive, and this is a trend that we saw already leading up to COVID, but it was only accelerated during COVID. People spend a lot of money on their pets. And after COVID, people are spending a lot more money on their pets. And in addition to that, what makes it even more attractive is that you don't have the patent cliffs that you typically find in pharmaceutical companies, right? And that's because regulation there within the pet industry is a lot less. And so if you think of some of the old, or when we look at some of the old blockbuster drugs, that the likes of Zohutis had, 2 decades ago, they're still blockbuster drugs today, which you typically do not find in your traditional pharmaceutical businesses.
It's going beyond the obvious, isn't it?
I mean, the MSCI world has got well over 1,000 businesses in there. And, part of our investment philosophy is not necessarily to look at all of those businesses and invest in as many as we can, but rather to find the 25, the 20 that we believe we understand well and that we believe are going to generate significant value. And so we focus on what we know best.
Victor Mupunga, thank you very, very much indeed. 2 unlikely candidates plus J&J from the world of healthcare.